we can't tell because liquidity is actually the dominant factor. So right now, we look at the business cycle using the ISM survey. It's below 50, which means the manufacturing is still contracting. So, okay, we're nowhere near tightening financial conditions. They did tighten because the dollar went up and rates went up, but the Federal Reserve and the governments need to change that because we need liquidity in the system. So even if it went up every single month for 9 months, it's still September next year before you get somewhere near a peak in the business cycle. And crypto tends to that tends to be a rolling top, and crypto tends to have a rolling top around that. So I think it's longer than people imagine. So it's later in the year. Because people are so scarred by last time around again. And if I look at it on a probabilistic basis, when we took off so aggressively in 2023, I'm like, okay, look, there is a chance that we front load the cycle. But then we had a 8-month correction, and that kind of put it back on track. And so therefore, I think we've got two odds now is, does this look like a more normal cycle? What that means, I don't even know anymore, but let's say 250,000 Bitcoin. Or do we get something like 2017 and 2013, which is something a bit wilder? And I think the probability has gone up for me of that. But, I don't make predictions on this stuff because it's pointless and you just get trolled on the internet for making predictions. But probabilistically speaking, from what I know today and what I know about liquidity and the regulations and everything else, the probability is that we're going to get a more violent upside cycle with lots of volatility in the middle. Like, liquidity has been falling for 2 months now, 3 months. It's fallen quite sharply. And that's whether you use Global M2 or whether you use our Global Liquidity Index, Total Liquidity, that we produce at Global Macro Investor. It maps really well on Bitcoin. Now, these correlations don't last forever in a perfect form, but it's been perfect. And it would suggest that the market peaks sometime December, end of the year, early Jan, and sharply corrects, which is exactly what happened last time Trump came in. When Trump got voted in, the dollar screamed higher, rates went higher. He actually came in, rates went lower, the dollar went lower, but that run-up over the Trump getting voted in 2016 caused a 35% correction in January of 2017. In the end, it was all noise. But, we're going to get to that. We're going to get to very frothy. Some people are worried it's happening now as we speak. Maybe. Doesn't look like it according to my work. It would suggest later. But, who the hell knows? But we'll get one of those to come. Then we'll have the post-US tax season version as well. Because in the end, people are going to have a lot of gains. And if they've switched anything around, they're going to have to pay the tax man a lot of money. And they have to sell stuff to realize profits. And that's that kind of sell in May and go away idea that generally works. It's tax season.
Well, it worked this time again.
Yep.
The summer was like the most boring I've experienced it in, I think, since I started in crypto.
Yeah.
And I know it's very hard to make predictions where the markets are going to go to. At least if you look at the crypto markets, Bitcoin has seen a very strong uptrend since, the FTX crash in November 2022. But on the other hand, there are a lot of things putting down the crypto markets at this stage, which is we're still in a relatively high interest rate climate that, yes, you're mentioning PMI, and that's contracting for, let's say, 6 to 8 months already, and it's going down even more. But the Fed is very stagnant on the interest rates and not really looking to cut it a lot in 2025, unless the labor market data is going to keep being terrible. And I think the past few months we've seen a substantial drop in job openings, in ADP, all those data points. Would that probably kickstart another strong move in anything related to crypto? As in, there is some sort of correlation with ETH and the yields, right?
So that is the global liquidity, right? And or we use Fed net liquidity is another one. Either way, or financial conditions, even better. Financial conditions that we use are basically rates, the dollar plus oil. Those are the kind of three variables that really matter for the global economy. Oil has been falling, so that's dampened the issue somewhat, but the dollar screamed higher, as did rates. Now, that has a lag on the economy. So we're talking about it having a lag on crypto. We probably see a slower economy in Q1 or Q2 than people are expecting, which plays into the idea that you've got is, I think the market is underpricing cuts now by the Fed, and they kind of go through this madness every time this happens. They're like, well, it's one and done, or well, it's just a little bit. They're never going to do it. And then eventually they have to, because they've got to roll $10 trillion of debt, as does every other country in the world. And financial conditions are far too tight for the Chinese. If the Chinese don't get their economy going, we have no export market. We've got no bar of treasuries. You know, Europe is struggling as well. Germany's in a total mess. So we need to ease financial conditions, and they all know it. And they've had to hold on as long as possible because inflation had been higher in the previous cycle, and it cost everybody the election. Every government across Europe, pretty much around the world, that was in over COVID got voted out. Why? Because prices went up so much on people. So they're very nervous about that. But we've now got a new regime. So I think you're right. I think the probability is the economy's weaker than expected, and that gives them the green light that they've been after forever.
I mean, is there, I think what is my PTSD is that crypto basically boomed during COVID, where the world completely got destroyed and crypto did well. And I kind of get the feeling that we're again seeing the world just being destroyed and crypto starts to do well again. Is it like...
No, I don't think that. This is very similar to the 2016-17 cycle. Rates went up once in 2016 and then stopped. Didn't go up again. In fact, the Fed didn't even put any liquidity in, but the Chinese had to because the dollar had been too strong prior, so they really had to stimulate. And then the Europeans and the UK then had Brexit, and they started stimulating. So the US didn't need to be doing it. Same in 14 and 15. I mean, rates didn't move. There was a bit of QE that came out of Europe, obviously from the banking thing, the Draghi, everything it takes. But then after that, crypto, the amount of movement in crypto doesn't need a massively large total amount of liquidity. People just over-focus on the Fed, over-focus on balance sheets. Just as long as global liquidity keeps rising by 8%, crypto will still do 100% a year. It's kind of... So I worry less about it. I think, again, people have an anchoring bias on the last cycle, but having seen three of them, the last one was the outlier, and crypto went up less and finished earlier. So therefore, that kind of doesn't make sense if it's just the liquidity cycle. I think a lower volatility cycle in terms of the economy actually creates more risk-taking than a higher volatile cycle like COVID.
I think you're saying something very interesting there, which is that previous cycle felt completely different than 2017 for me. I think if you look at the terms or the groups of participants in this cycle, it's a whole new dimension compared to the previous one. And 2021 wasn't really a group of new investors coming into crypto. It was a bunch of venture capitalists and funds just jumping into crypto, just trading it, and that's about it. Now we have actual institutional investors, governments getting into the markets, which in some way, if you, on top of that, combine it with the amount of debt that we have, 2008, it creates a vibe that we might have the final easy cycle and then perhaps have a copycat of 1929-ish, where all of a sudden the debt bubble bursts.
Can't happen.
Why?
So what happens in a debt deflation is the value of collateral falls in excess of the loans, and so it gets called on.
Yeah.
And the collateral gets liquidated. What they learnt in 2008 was a very simple trick. Debase the currency and the asset optically goes up. That was the whole Draghi thing. That was everything. So we cannot do that because we know the mechanism, the US, that is. Can it happen in individual countries, whatever? Yes, but not the US because it has the reserve currency and has the fiat currency. So the 1929 scenario cannot happen. It simply can't happen. We've taken that left tail out. However, let's say, okay, Bitcoin goes to 1 million this cycle. It's a stupid cycle. It all gets out of control. Massive bubble. Could we skip a cycle? That's possible. Could we fall 75%, rally, don't go the new high? We've seen NASDAQ skip a cycle. NASDAQ skipped a cycle from 2001, where it fell. So 2003 low. It kind of skipped a cycle first before it really started going. So, I'm open to that idea, but we'd have to see a full-blown bubble cycle. My guess, that's the next cycle. I think that's the whole everything, AI, ridiculous, everybody knows the game, bubble cycle.
I mean, it's something that you phrased as the exponential age and the growth that goes along with it. But something that comes up in my mind is that crypto is very retail driven. And once you get like 1.5% to 2% in your savings account, and all of a sudden DeFi becomes attractive and it is like 10% or 15% yield you could get. The higher this cycle goes, the more vertical it becomes and the more liquidity being added into crypto, the more fragile the banking system will be. So there might be, in my case, or in my thought process, a thesis that if this cycle, for instance, goes higher and longer than we all expect, it might tumble over the entire financial system that we used to have because of the fractionality that we have in the banking system.
Just don't think that much capital can leave.
They don't allow it, that's the thing.
Yeah, that's right. And think of the size of money market funds. Think of the size of that boomer industrial savings complex. Think of the size of the financial system. Right? We're just seeing such a fraction that I'm not sure it's going to be deposits. I mean, we've seen similar, which was 1999. It didn't threaten the banking system. That nobody wanted money in their bank. They just wanted to buy tech stocks. Because tech stocks were just vertical in the fastest acceleration of any stock market cycle in all history at the time. And then there was the blow up. So I hear what you're saying. I think it more happens over time. This migration keeps happening. And that 3 trillion to 100 trillion is also the 500 million active wallets now, to 1 billion active wallets, to the 4 billion active wallets, to all the agents and AI agents using wallet. I think it just happens over time. And I think everybody's okay with that. But, if you were right and everybody jumped ship, both ships probably sink.
During these markets, I'm always looking for opportunities to build my portfolio, and OKX is bringing you an opportunity. They are the first fully licensed exchange in Europe with the lowest fees. And to help you a little bit with your portfolio and to celebrate this milestone, they are giving away up to 50 euros in Bitcoin if you sign up today on the exchange. Signing up can be done within 5 minutes, and if you deposit 100 euros worth of crypto, you'll receive the first 20 euros in Bitcoin. Start rebuilding your portfolio today. Go to the link in the description or scan the QR code and enjoy up to 50 euro in Bitcoin.